Hey guys, it's the Flopping Groper, and today I'm going to explain overbought and oversold using MarketCipher B. Overbought, neutral, and oversold are just terms used to describe the condition of a market in regards to an oscillator reading. So there's going to be countless oscillators out there, but they're all going to do the same thing, which is give you those overbought, neutral, and oversold readings based on that raw price data. So as you can see here, we're looking at the daily chart for Bitcoin using MarketCipher B. MarketCipher B is just a collection of fine-tuned, time-tested oscillators all consolidated into one area. But for the purposes of this video, I'm just going to talk about the blue waves and their relation to these plus or minus 60 white threshold lines here. So this top line here is your plus 60 line. That is going to be the designated overbought line for MarketCipher, and the negative 60 line is going to be the oversold line. So what you're going to find more often than not on these larger time frames is that momentum past these thresholds is actually going to lead to further movement in that same direction rather than a reversal back to the mean as one would expect from a traditional trader's standpoint. So here's an example right here. So many times throughout this overbought wave here, we saw red dots indicating periods where momentum had taken a downturn. These may have seemed like signals to short when they were printing, but in hindsight, the upward move had actually only just begun. So to avoid this mistake of exiting a trade too early, what you may want to do is wait for the oscillator to actually cross back over that 60 threshold, which would be this period right here, and that's going to indicate the conclusion of that acceleration phase and the beginning of a more neutral consolidatory phase with the oscillator. The way I conceptualize this from a mechanical standpoint is that momentum past the 60 threshold is akin to a runaway train. Therefore, it's going to take a lot of force to slow that train down. When you enter a short trade off of an overbought wave, such as this red dot right here, it can sometimes be like asking a runaway train to reverse its direction for you. There's a lot of things that have to happen before that train goes in the direction that you think it will. For instance, it has to have a period of deceleration followed by a period of velocity decreasing, and then that train actually has to come to a stop, even if for a split second, before it can start going in the opposite direction. And so the market is going to behave similar. There's going to be barriers and red lights and stop signs that this train blasts through. But eventually that momentum is going to fall below that overbought level, and we're going to leave that acceleration phase and enter that declining, more linear phase of price action. It's going to help you to conceptualize any wave action over or under these thresholds as a period of trend acceleration, whereas waves in between these levels, like in the middle here, swiveling around zero, those are going to indicate levels which represent more linear trend velocity, or like a consolidation phase. This neutral area in the middle is where changes in market direction are more feasible and more common due to a lack of strong momentum generated by either side. This often leads to a consolidation type effect when you look at the momentum that's like closer to the zero line, and then you look up here at the price action. Typically you'll see some sort of consolidation going on while these blue waves are cooling off, so to speak. So recognizing all this, it's important to know that the natural law dictates that the universe is always going to be in search of some sort of balance or homeostasis, and it can manifest itself in harsh ways by snapping back to the mean, such as when you're observing population growth or measuring an earthquake or something like that. So when we measure these extremes, we must recognize that the potential energy is there for a correction to occur, but there's no way to know whether the situation needs to become even more extreme before it can have that correction. So looking at this macro chart of Bitcoin, you can see that the majority of Bitcoin's growth this year occurred during these acceleration phases up here. This led to amazing results for anyone entering long trades, but anyone who was taking short signals like these red dots here obviously was getting wrecked. This all happened during a period where 80% of the blue waves were printing above the zero line. These trigger waves down here, the few times it actually dipped below the zero line, these were the waves that catapulted you back up into those extreme bullish levels of momentum. If you want to better understand exactly how to interpret each of these waves and disagreements between the waves and the price action, which gives you clues to the future. You definitely want to check out my divergent price action video. It's called Divergent Price Action with MarketCipher B. You guys can check that out, and that's going to pair really well with this video to give you a deep understanding of oscillators and divergence and how to read everything. So when we take this logic that we just talked about and we apply this to an even larger time frame, like the weekly here, all of a sudden this is kind of making more sense. You may have looked at this before and you see this big blob of momentum here and you don't know when this thing's coming down, you don't know if it's going up, but just know that we are above the 60 threshold on the weekly. Therefore, we are in an acceleration phase. So as long as this oscillator can stay above that white line like this, there's the potential for more upward move here. If the momentum falls below that white threshold, then that would signal that we've exited the acceleration phase and we may have entered a more consolidatory phase in Bitcoin's market cycle. But obviously this wave, as you can see, could cool off maybe into April, May, and it may even take till June, but basically we could basically settle out over the next 2 months and still remain bullish and still continue higher up. There may be some short and midterm corrections on the lower time frames, but overall this chart is going to keep pumping until this blue wave slips under that plus 60 threshold and enters a more neutral consolidatory phase. So hopefully this video was helpful to you guys in understanding overbought versus oversold and how it actually pertains to MarketCipher. Feel free to use this information in your own oscillator strategies and consider becoming a MarketCipher trader at MarketCipherTrading.com. And thank you so much for watching, guys. Cheers.